Mayuresh Joshi is with us. Mayuresh, good day to give us a couple of stock ideas. I believe you're looking at Avanti as well as Abbott. Run us through the rationale that you're positive on both these two names.
Yeah, absolutely. No, absolutely, yes. And if you probably look at the construct, right, the assumptions of tariffs, specifically Trump tariffs on pharma, has affected the sector as a whole. But Abbott India, generally, I think a large part of their revenue pool comes in from India. In fact, 98% of their overall revenues come in from India. In some of the drugs that they are manufacturing right now, obviously there has been some element of domestic competition. But there is expectation that there will be far more new launches that come through in the next few quarters, which should support mid-teen revenue and profitable growth. And the premise in terms of earnings probably remaining very, very strong and stable with better pricing, new launches should probably persist. From a balance sheet perspective, as far as Abbott India is concerned, you're probably looking at an almost debt-free balance sheet. You've got ROEs in excess of 27, 28 odd %, EBITDA margins around at 28 to 29% mark, and ROICs which are around 50 odd %. So I think it gives us sufficient space in terms of solid earnings pedigree, EPS, RS rating, institutional holding. The parameters we see in CanSlim are probably getting fulfilled by Abbott. And again, around 1.5% of dividend, which probably also means that dividend yield acts as a strong support. So Abbott India is something that we keep on our watch list. The other idea is Avanti Feeds. Our take here is numbers have been exceptionally good. The expectations from the management as far as pricing is concerned when it comes to shrimp exports, the input costs as far as shrimp feeds are concerned, I think both of them probably are looking in a positive direction. The expectation again, and if I have to peg this again from tariffs as well, what really is happening in terms of the duties that Avanti Feeds pays compared to Vietnam, Thailand, China, and even in Ecuador is lesser and significantly lesser compared to these countries. So even if Trump tariffs probably go higher in this aspect as well, Avanti is already quite well shielded. And in fact, it will become far more competitive with a lot more exporting countries at play. Pricing, volume growth management sounds very, very positive. And the expectations in terms of overall volumes as far as shrimp exports are concerned should probably improve in the succeeding few quarters as well. So I think a couple of stocks where EPS RS rating looks very, very attractive to us investors.
Okay, all right, Mayuresh, got that. Mayuresh, in terms of Bajaj Finance and the selling that we've seen, I don't know, would you read anything into it, or is it maybe just some churn, some technical factor? I'm not quite sure. What's your call on the stock?
Afternoon, Subi. Now, again, I think has been a newspaper article where they're saying a large part of the NBFC pool probably needs to look at its overall book in terms of revolving credit as well. And that's where I think the beating down of a large part of the NBFC pool has largely happened. But if I look at the construct, Shriram Finance within this space looks relatively better placed to us at this juncture. Very, very close to the pivot that we are watching. Again, I think very, very strong EPS RS ratings as we see it. The overall pool, Surabhi, for Shriram Finance in terms of personal loans is just at 3.4% out of the 250,000 overall AUM book that it probably carries. The expectations in terms of asset quality pressures on the overall book, including commercial vehicles, MSME, farm equipment, personal loans, two-wheelers, expected to come down as rural economy recovers quite smartly. Rural portfolio is almost half of the overall book, semi-urban is 25%. And therefore, as these large parts of sections of the market start improving over the next few quarters, the sequential improvement in terms of reported numbers should start coming through. And in any pattern, I think asset quality pressures are going down. ROAs are close to 3%, ROEs are close to 16 odd %, which gives it a very, very healthy pedigree. Again, asset quality, along with capital adequacy at 20 odd % as far as tier 1 is concerned, should support balance sheet growth. This is one stock outside which is finance, we probably got out of it.
Mayuresh, your thoughts on the market as well, right? We're ending today's day. All the sectors are ending on that positive front. We've seen that, Nifty snapped its 10-day losing streak. So surely some cheer coming in on that front. But your thoughts?
Afternoon, Vinny. Afternoon, Surabhi again. No, two things. I think we just put out a report a few days back where we have tried to analyze all the previous market corrections, including the 2008 fall, which was an aberration because I think this was for structural reasons why the market fell in 2008 and 11. But if you leave that aside, the duration of this fall has been extended. The average market fall over the last few years, whether it's 2015, 19, or the 22 fall as well, The average duration has been 88 to 90 odd days. The maximum duration was 188 days during the 15 fall. And we are already at 152 days as we speak. Again, from a valuation perspective, I think reasonably placed. The dollar index is coming off, which is one more trigger for the markets as well. The gap between earnings yield and bond yield, that has come to long-term averages, where the market is now of the belief that the worst in earnings should probably get capsulated as Q4 numbers probably just play out. And from Q1, numbers should start being relatively better as we speak. And therefore, I think the entire market scenario that we see at MarketSmith India as well, in terms of the bottoming out process, the lows that we've made, if we hold that out for the next few days, and if we see a follow through day, our take is that we should be close to a bottom as we speak. And therefore, I think selective sectors, selective stocks should start contributing and doing well as we head into the first half of the next financial.
Mayuresh, your thoughts on Hitachi Energy, right? Rabamakshi was mentioning strong order pipeline, capacity expansion plans that they have. Looks interesting. Is that something you would look at as well? Because Goldman Sachs, surely they've given that target of around 13,000 plus. So interesting.
It is interesting. And in fact, I think as Vamakshi mentioned, I think the large element for Hitachi Energy is going to be the huge inflow that comes in from the HVDC order book. And therefore, I think a combination of the HVDC order book along with an exponential increase in terms of export demand, that really augurs well for EBITDA margins. Now, the 10.5% margins that they were reporting, the expectation here is that if they exit FY27 with a 13.5 or a 14% EBITDA margin and the top line growth, which the HFDC along with the export order, and even from a segment perspective, Amachi, I think the growth is well diversified into products, projects and services, which are expected to grow quite significantly, will mean operating leverage kick in onto their balance sheet, and therefore ROEs should expand beyond 30% as we head into FY27, which is a huge task for a capital-intensive large company. Yeah, so I think if earnings support, I think the momentum can very well hit.
Okay, that's a view coming in from Mayuresh on Hitachi Energy. Thank you so much for joining with us on the show. As always, it's a pleasure having you.